What's going on, ladies and gentlemen, and welcome back to another elite and educational video with your host, Money Mayor Effects, or Tamir, right? So for today's video, currently it's Sunday. Market just opened, as y'all see. Looking at the 1 hour right now on gold. The market just opened. And yeah, we start this challenge in a few days, January soon coming. And I was thinking, why not just get on the charts and really just build a bias towards the market, just to help me better understand what the overall market is doing in terms of gold, and just see its, I guess, trend, direction, and overall outlook heading into the new year. So, before we get into it though, y'all go ahead and like the vid. We don't just be saying like the vid for no reason. Really like the vid. I see I got some viewers just off the last drop, so go ahead and leave a kind like, and it's all love. But now let's just look at gold from a fundamental aspect first, right? Because that's kind of what I really wanted to do. And what I mean by that is just by looking at it in terms of, okay, what is really happening in the world that is really driving prices or gold's run right now, So real simple, right? Use our resource. Let's ask ChatGPT, what is fueling this current bullish gold run that we are seeing heading into the new year? And what resources can I use to help me predict its performance in Q1 of 2026? Because that's essentially what we're going to be trading, is the first quarter of 2026 with this new 100K account. So let's really see what we're going to be doing. Long story short, why gold is strong right now? Well, the expectations of interest rate cuts, right? It says analysts and markets are pricing the Federal Reserve rates cuts of more dovish monetary policy in 2026, which reduces the opportunity cost of holding gold, a non-yielding asset, yes, and weakens the U.S. dollar, both supportive for gold prices. Weaker U.S. dollar, so interest rates are getting cuts. Interest rates being cuts is usually a good thing. Like, it just means that the U.S. dollar is such in a bad space right now. That's why the Feds cut interest rates, is because it gets to a point where, okay, well, we have to step in and try to encourage spending or help, the economy by lowering the rates, which lowers the prices of all things, which shows a weaker U.S. dollar. Okay. Gold is a safe haven. It's always been a safe haven, right? Gold has always been I was just over here reading my Bible. Like, it's in biblical times. Like, gold has always just been a thing of value. Central bank accumulation, central banks. Oh, wow. So, okay, it says banks like Asia and emerging markets are aggressively buying gold as part of the reserve diversification strategies from the U.S. dollar dominance. Nice. ETF inflows, technical movement, right? The technical movement is what we're going to move on to next, of course. And then economic uncertainty and debt. So yeah, so gold right now, long story short, just based off some prior knowledge I had, and then also just a little more updated research that we just did. These interest rate cuts are going to positively impact gold because that's a clear sign that the U.S. dollar is weak. Which also hints at inflation, kind of like it was says at towards the bottom of this, inflation expectations because rates are getting cut. And then just gold being a standard of just performing well, I think is a good fundamental basis for us to understand what gold is going to be doing. Look, probably for a good amount of time. I'm not going to predict the X amount of years on it, but I would say a good amount of time. What analysis are predicting for 2026? Many strategies see gold continuing its bull run in 2026, potentially trading in a higher range, 4,000 to 5,000 per ounce. So right now we are trading in the $4,000 per ounce, 4.5 around there. You just round it out. It says strategists are planning 5,000 or higher. If structure trends, UTS demand, nice. So I think that's enough in terms of like the fundamental, because like everything is pointing towards gold performing well, right? And if we even go on a more technical side, which is, you know, the main thing we do as day traders, clear monthly runs of bullish pressure. I mean, December is ending off very bullish. Yeah, that's from 4.2 per ounce to all the way up to 4.5 per ounce we're seeing right now. Really good aggressive month, breaking highs that are up here. So in this type of market right now, I mean, me thinking about it, like, because of course everything has to tie back into, okay, how are we going to trade this $100,000 account, right? It's just like me thinking about it. It's like, okay, on an overall fundamental level and overall broad perspective, gold is bullish and gold is going up. So as I'm taking my trades in my lower time frames, you know, we're going down here on the lower time frames, seeing what it looks like on a more technical time frame or technical point of view. I just, long story, have to position myself to be a buyer in this market, and I should succeed, you know. I shouldn't really be looking for no type of bearish hindrance, any type of bearish crazy activity going on. I feel like the retracement already did happen, and like I said, we did break highs, which are right here. These are weekly highs that are being broken, and now we're just making higher highs from that point. And then if we go down to some more intraday time frame, I was really on my 1 hour, right? And I guess this is the part of the video where I can kind of tell you guys a little bit of my strategy, right? Because everything is strategy with this market. So I can delete everything because I just already know, right? All I'm doing, so take everything that we just talked about. Let's recap, right? From when we did our fundamental, we said from our personal bias and what ChatGPT just helped us understand is that gold is going to continue going up. You combine that with the technical aspect and you seeing that, okay, gold is closing monthly highs, closing weekly highs, etc., right? And then take into consideration about kind of the last point I said in terms of what I want to be doing as a trader. I want to be positioning myself to be a buyer. Ribbon on top, when you're on your intraday time frames, you want to be taking advantage of buying setups, you know, and the way you do that is by tracking sellers. And I've said this before in one of my classes during FXC Academy. All I mean is that you see there's blue and red candles, right? Or there's two different type of color variations indicating buyers and sellers, right? Blue being buyers, red being sellers. If I want to buy the market, I have to wait for sellers to come. So every time there is a seller, I could position myself to be a buyer, right? And I would say the best way to visually see this is by market structure. So if I just draw out the raw market structure of the market, what I mean is that every time price goes down, you want to buy. Every time price goes down, you want to position yourself to buy. Or every time there's just a red candle, boom, red candle, you look to buy. Red candle, you look to buy. And this is how we sit there and position ourselves to essentially just be a buyer in this market, you know. Like, you know, yes, the market goes up and down, but you should only be looking to buy just based off of all the other analysis we just did on a fundamental level and a technical level. It's just like, all right, man, position yourself at a low and buy at the high, especially during session. These red zones are my sessions. So like, session opened with red candles. So I could have predicted this blue candle by looking at a lower time frame breaker structure. I'm not going to look at that right now because that's going to be for when I'm live trading, but that's what I'm doing because that's what makes 1 hour candles. It gave us another red candle here during session, and that gave us the opportunity to ride another bullish candle. Like, that's some solid movement. That is, that's 263 pips right there. It's nasty. Not points, but pips. But yeah, I think this is really helpful. Like I said, heading into this $100,000 account, because it's kind of, like I said, it's like, all right, there's two sides to the market. You're either buying or selling, right? If we can just already know and have it concrete in our head that we are only looking for bullish setups, then that's going to make passing this $100,000 account a lot more easier. And just a lot more clear. Like, it's just going to be like, all right, I already know what I'm looking for. Let's get it done and then get on with the rest of my day. So that's the video, guys. Leave a like, subscribe if you're not, because this is a real life thing going on. Like, this isn't like fake. This is like Ty's real life right now that you guys are going to be part of. So drop a like, subscribe if you want to follow up with the journey, and I'll see you guys soon. Peace out.